Hi, Ron. Stuart here. Last big, not last big, but it's certainly the biggest event of the month, and probably many will be switching off after tonight's Fed meeting, the FOMC minutes. I'm saying it's not the last because on Friday we got the PCE price index. That's very key to the members of the Fed when they're looking at what they're expecting with regard to inflation as we go into 2025. As we said tonight, it's virtually nailed on that we will have a let's just share this with you. This is from the there we are. This is from the CME group, the Fed Watch tool. 98.6% chance of 25 basis point cut in approximately 15 minutes from now. Bringing it down to 425 to 450 range from the 450 to 475 range. After that, going into 2025, it's much more uncertain, and obviously markets hate uncertainty, but this is on tonight. We've had a stronger dollar on the back of that, on the back of this, I should say, and we'll see obviously what happens with regard to the actual data itself. Let me just get that back. Now there we are. So we'll see how that changes later on from the Fed Watch tool. So sorry a minute, let me get me out of the way. So this is I'm just going to start with the indexes. This is big news yesterday. We had a 9th consecutive day low for the Dow. This is the worst run it's had, the 9 consecutive down days for the Dow. Hasn't happened since 1978 apparently, and lots of records hit. But as you can see here, or hopefully you can see here, we've ran right into the 50-day moving average, a key indicator or a key technical indicator both for the big players and us smaller retail players. You can see here it's held, well, more or less held here on the last time we went into it at the end of October. It's held here so far as we come to the end of December, and then we've rallied again, rallied again to new all-time highs here at 45,000. So although it's a consecutive down run, we've this system here went short there on the 11th, and it was closed out here at the 50 period moving average. Still a short left on that particular Dow move, but the indexes remain very robust. It's a robust part of the year. So whether we actually give up the rest of our December gains as we come into this last week or so of the year, we shall see, but a lot will depend on what, if anything, is a bit of a surprise there. What we're expecting tonight from Powell is a relatively positive, and the rest of the Fed is relatively positive spin on the outlook for the US economy, and it does look quite positive. A lot of that is to do with, as I said yesterday, the rest of the world is in a bit of a turmoil. We've got all this political uncertainty stretching right around the globe, from South Korea to France and Germany, and obviously the wars in Ukraine and the Middle East aren't helping sentiment generally. So hence we're all back to the US, and we've had such a strong rally for the dollar. The Trump dollar trade is very much on. Dollar index is up 4%. The Dogecoin, I was looking earlier, is up 100 odd percent, 130%. Tesla's up 90%, new all-time highs again yesterday, up again today. Tesla, Coinbase up 61%, Bitcoin up 50 odd percent. The banking sector up 6.4% on expectations of a slower improvement in the dollar and a slower yield cutting capacity into 2024. So we're looking at what the statement says, how Powell plays the press conference later on. So we've got the initial statement at the top of the hour. We've got the press conference in 40 minutes time at the end, at the half hour, and then in between that, obviously there's the dot plots within the statement as well. So are the dot plots still looking to fewer rate cuts for 2025? Probably 4, 5, 6 months ago, we were looking at significant rate cuts for 2025 for all the central banks, particularly the Fed, obviously leading everybody, 5, 6 for 2025. But remember, this time last year, we were looking at 5, 6, possibly 7 or 8 rate cuts from the Fed for 2024. That hasn't played out, hasn't panned out. We've had a very, very strong 24 for, and you see here for just go up to it's the daily. So if we take us all the way back to this time last year, a very, very strong year for the stock markets. Dollars improved significantly, and obviously there's some key assets. The Trump trade story has played out very aggressively since the 5th of November as well. So everything's sort of falling to a line. On top of that, we've had all this political uncertainty in other parts of the world. So we can't discount black swan events into 2025, obviously. But apart from that, the US market looks pretty robust. The jobs market is still very strong. I was going to caveat myself saying not very strong, but it still remains very strong, I would argue. Inflation has come down. There's some stickiness in it. We've talked about that for 2-3 years now. Particularly the service area, but that's positive because it's showing a strong and robust economy. And obviously the consumer, the remarkable strength in the US consumer, and that's key to the US sentiment and how they feel. I was reading some analysis last night about the strong sweep that Trump managed to get on the back of people still feeling pretty woeful about the rapid rise in inflation over the last 4 and a bit years, and it's still hurting people's pocket. And obviously that played politically, made it very, very difficult for Biden and Kamala Harris as well. So he's played on that. That's worked successfully. He's obviously had some lots of help from Silicon Valley as well, with all the technological backup he's had, and obviously where we go from here for the next 4 years will be incredibly interesting. See how much influence Musk and co have. See how long that buddy palliness continues. There's a history of them falling out with close aides, but we'll see what sort of politician Musk wants to turn himself into. But anyway, dollar remains very strongly on the front foot. Yesterday's dollar retail sales numbers and the move in dollar CAD. Sorry, so what the majors? No, we just bring that dollar CAD. Where's it gone? There it is. Dollar CAD chart we had from yesterday. So new 56-month high, April 2020. The height of panic, of COVID. Last time Trump was in the White House, April 2020, dollar CAD was right up at this 143 areas, and yesterday we saw that sort of a retrace and then big old rally. So this is we were looking at the Bank of Canada and retail sales number, Canadian inflation and retail sales out of the US. Initially, it looked like we were going down, but the following hour was a big engulfing candle, as we talked about at the time. We couldn't breach this 142.75 area. It held, and off we went, and we continued to move higher. And so, as I was saying yesterday, the end of hour trader was still quite robust. The data sort of was brushed off, and off we went to new highs, and then new highs again this morning, and again in the last hour or so we've gone to 143.40. So off we go again. I just need to pull that up. There we go. So 143.40, just shy of that for dollar CAD. So dollar's very much on the front. The CAD's very weak. My end of day strategy here, which is over on this other screen, we've got Aussie CAD, Aussie yen, looking to go. Sorry, it's the wrong one. That's on a faster one. The full end of day one at the moment is CAD Swiss looks like it's we're going short. CAD yen looks like we're going short, and pound CAD went long yesterday. So Canadian dollar very much under pressure. Aussie is down at 63, a new low today, under 63. 60, well, back to 63 now. We went to 62, 98 earlier. So dollar on the front foot here. Swissy 89.24, having got to 89.40. Dollar yen got to 145 and then come back in the last hour or so. So there's that 140, 154, I should say. Sorry, we come back at the moment, but dollar's still up on the day and up from these lows from yesterday as well at 153 zone. So dollars on the front foot. Euro has given up the key 105 area. We're down again. We come back a wee bit now ahead of this the actual announcement. And sterling 127. Sterling's having a better day, back over 127, and again up in the last couple of hours against the dollar. But we are really sort of waiting on what the Fed might say. So all eyes really on the dot plot, what the other members of the FOMC have got to say. But obviously Powell's press conference will be key as well later on. Assets that have suffered since the election. I mean, gold, our favorite metal, if we just go back to the daily again, was up and then we were down again, weren't we? So this is post election. We were down, we rallied, but we didn't rally enough to take us back to new highs, and we've stalled again at this 27-25 area this week. So we turned around. Last week I should say. We turned around Thursday, Friday. We're down. We bounced a wee bit on Monday. We were down yesterday, and we're currently down again today. Remember, we went short here on Friday into this zone that we'd had for 9 days before we rallied and took out this big candle of the 25th. But then we've sort of given it all back very, very quickly. So you can see it's taken like 10, 12 days to eat up that one big down day, but 2 days, 3 days, 4 days, and we've got given it all back again. So the 26.05, which is our late November low. So are we going to test that again? But we really need to break this next level here, which is the 26.30 level. But we are still down, less action the last few days, but we're still on a downtrend for metals. And overall, since the election day here, we're still down about 5%. I think it was about 4 point something percent when I did my maths. Yeah, 3.7%. It's not as much as I thought it was yesterday. So gold down. Oil also under pressure, but there's other factors, not just the US election causing the oil market. And this is the area we pointed out earlier in the week about these three parallel trend lines here, which is relatively positive when we get sort of pattern repetition. So 67 is our big fat floor for US oil, and the $70 area is now looking like a bit of support area. It has been for like last 5 or 6 days. We seem to be breaking out of that channel. However, the lows still remain low, and the highs have remained sort of trending lower. If we zoom in here, again going back to middle of October here. But we've got a flat bottom at this key $68 level. So are we going to break out to the upside? Are we going to come back into this channel and go back to test 68 and just bounce around this channel at the moment? We're at the top end of our channel, and we've broken out of it at the moment at 70.50 for US oil. Let me just go back to the euro under the 105 level and see what's see the trend continues. We're still stuck in the 105, 106 areas. We've said 104 is being tested. Our December low was here, 104.55, and a couple of minutes to the actual announcement. So let's put on the 10-minute chart, see how the euro is reacting. So it's been positive into the news. So let's have a quick look at the calendar. Obviously, any asset you want to have a look at, guys, do let me know. I should have said earlier today, we've obviously had hotter inflation in the UK at 2.6% from 2.3% last time. And also in the euro area, inflation came in at 2.2% from 2% last month, but not as high as expected, 2.3%. So, but it is drifting up, and then the core held to 2.7%. That's the key number. So we've still got this stickiness. It's round about the target, but it's not going under. The deflationary story is perhaps waning a wee bit, but there we are. The numbers are out. So as expected, or 98% or whatever it was, we've got a 4.5 Sorry, that's still expected, and it hasn't actually come out yet. But 4.5%, the 425 level. So there's the euro weakening again. So obviously the statement, as I said up front, is likely to be a relatively positive spin. That's a stronger dollar, and down we go. So we could see certainly the Aussies under .63. Dollar CAD will make new highs. 145.57, 58 as we're going up, 154.35 for the yen, and sterling's come back under 127, 126.60. So it's an initial reaction is in line with really what many were expecting. So let me have a quick look on my feed for the statement as it's come up here. Stuff. So just bear with me a second. I'm just reading this off my other terminals, off my right terminal here. So it's here. It's not updated. So let me just quickly highlight the numbers. So very much in line with expectation. 73.3% of basis cuts for 2025 is what the market's looking for 2025. So 73 basis point cuts for 2025. Still, that's not really changed. Let me have a quick look at the calendar itself. Indicators suggest that economic activity continue to expand at a solid pace. That's a positive spin. Since early in the year, labour market conditions have generally eased and the employment rate has moved up but remains low. Inflation has made progress towards the committee's 2% objective, remains somewhat elevated. So since October, November, there's been sort of mixed data, really. If you look at the housing data, the jobs data, the consumer data, it's sort of been, as good. Some of it's good, some of it's been not so good. But overall, it's going very much in the right direction, and the US remains the most significant economy and most likely to see growth. So of all its major competitors, the US remains the strongest of all. Committee seeks to achieve maximum employment and inflation. That's a standard, nothing there. The economic outlook is uncertain. However, the committee is attentive to the risks on both sides of its dual mandate. In support of its goals, the committee decided to lower the rate to 25 basis points to 4.25 to 4, not from 4.5. Carefully assess incoming data. They've always used that incoming outlook, the balance of the risks. The committee will continue to reduce its holdings of Treasury securities and agency debt. Well, I mean, the debt, huge. Committee is strongly committed to supporting maximum births. All spoke to it. They're all in action. It was a unilateral vote. Voting against the action was Hammack, who preferred to maintain the target range for the federal funds rate. So there was one absence, voting for the policy with Powell, Williams, Sparkin, Barr, Bostic, Bowman, Cook, Daly, Jefferson, Kluger, and Waller. Voting against the action was Miss Hammack, who preferred to maintain. So there's one dissenter. That wasn't really expected. The committee's assessment will take into account a wide range of information, including regional labour market, inflation, and inflation expectations. So that is what really the market was expecting. The initial reaction is a stronger dollar. We have a stronger dollar from the cutting of the Fed's rate by 25 basis points. So the statement is in line with what the bulls were looking for. So now, if we look at the dot plots, that's also looking for fewer cuts for 2024, but it's or perhaps not is the case. So 104.35 is where the euro trades. Aussie very much under pressure as well, 62.70, and the one that's under the most pressure of all, I would argue, it would be the dollar CAD, and here we are at 143.68. So this, with the Fed now at 4.25, it compared to other banks. So the Aussie, the RBA is at 4.35, the Canadians at 3.25, hence there's pressure on the Canadian dollar, and euro at 3.15. And remember, Miss Lagarde was talking about more to come as well from them. So more action from the euro area. Tomorrow, obviously, we've got the Swiss National Bank and the Bank of England. Bank of England, is a bit of an outlier now with the highest of the majors rates at 4.75. They're unlikely to move tomorrow. The Bank of England. So hence the sterling. In fact, the sterling's actually moved as much as the others on the back of that. So there may be some buying opportunities in sterling. So 126.47, we breached the 126.50 area. So let's just see how this cools down. We're only 6 minutes into obviously the data. Excuse me. I've just had I had a curry before I came on, so I've got a glass of milk. I hope you don't mind. Usually my drinking my coffee and tea, but no, we got some milk today. So I hope you're well. I've got my t-shirt on again today, the t-shirt, and I'll come back to our festive. I think I called it the festive 50, didn't I? On Monday. That was a thing they used to do in the UK. John Peel, one of the greatest DJs the UK has ever produced, used to create his festive 50, an alternative indie sort of chart thing, the festive 50. That's always stuck with me. Our promotion here at proptrade.com is our festive 25. So I'll come on to that in a minute. So it's a 25% discount on our very well priced challenges anyway. But why not benefit from an extra saving over this period where markets are moving? I mean, lots of people, as I said at the beginning, maybe shutting up shop after today and tomorrow for the Christmas period, the end of the year. I know lots of professional traders have closed. Not a lot. I know 3 that have actually closed. I'm saying a lot. 3 of former colleagues and friends have stopped trading for the year. But it's the history is on your side for trading next week and the following week. Certainly in the stock market, so some of the best positive days for the year occur in these final 2 weeks of December. So it's some easy trades with probability very much on your side. Anyway, dollar cable 126.14. Let's have a look at what gold's done. Gold was under pressure, remember, and a stronger dollar will not have helped gold either. So we've crashed through this 26.30 area, the 32 line we had that was our support area. We're now down, and in fact under the 26.25 area as well. So we're down again to the downside. So 25 basis points is what the Fed have delivered as expected, and the statement is in line with the positivity that probably Powell will bring to the press conference in 20 minutes time at 30 minutes past the hour. Let me just see what anybody else has got to say. So my let's find my Reuters tab, cuts interest rates. They've just reported the news rate. Slow pace of further reductions. What we were talking about. See slow pace of further reductions, firmer inflation. Obviously on the back of the incoming Trump administration being quite inflationary, and they haven't said anything that's changed their outlook. So gold continues to decline on the back of the stronger dollar. And indexes will have probably come under pressure as well on the back of that. Let's have a look at the Dow that we were looking at before. This is the Dow crashing from 43. Where were we? The 50 was at 43,700. We're down 300 points on the Dow at the moment at 43,500. So we're under the key 4,500. If we just go back to the hourly chart, you see what a big down leg it is. So that down day, that 9 days looks like could be 10 days on the back of the stronger dollar. But this is just an instant reaction. See how the day pans out, and if there's anything circumspect in Powell's press conference. But as I say, 25 basis points. We're in the 425, 450 range, and expectations now remain perhaps a cooler outlook for rate cuts for 2025, which has always been the case really since Trump won such a clear victory as well. The other thing that's helped the Trump trades as well, was the clarity of the victory. There was no, because obviously marks before that were worried about a very, very close race. I remember last time they were still contesting it. He still says he didn't lose in 2020, and we had all the animosity that was led up to the I think it was Georgia, wasn't it? We didn't have clarity in Georgia until January the 5th about who'd actually confirmed that. He still argued that he'd not lost Georgia, and then obviously come January the 6th and the inauguration, we had the riot at the Capitol. So none of that this time. Very clear, emphatic victory for the Republicans and for Trump too. And so that's added to the cooler or the calmer, stronger rally for the markets. Get rid of that. That's not working. There we go. So stocks are lower, dollars up, gold is down, and yields have moved also. So 107, there's the dollar index itself here on the daily time frame. Strong day today. 107.50 is our next line in the sand. That was back on the 22nd of November. So again, another, you can see here that the strength of the dollar pre obviously the election, but since the election on the 6th, the 5th and the 6th, we've had a really strong move as well. So 4% here, another 4% since the 5th of November. So dollar is very much up. Just take this to the weekly dollar index. And this is, it's a combination of the strength of the dollar as well as weakness of competitors. Remember those PMIs, particularly in Europe, are looking bad. We've got that, as I said, we've got the political top problems in Germany and France. Obviously South Korea as well. So dollar is the safe haven, bid, safe, the stronger economy of all those areas. So it's been a very, very strong October, fourth quarter for dollar index. This is the last week of September here. So big old final quarter for the dollar index, wiping out the declines of the summer. And there we are. This is the beginning of 2024, and a big update from 105.25 to 107.25. So a big move for dollar over the year. And with just a week to go, so that's the dollar index 500, still holding 60p, still way above its 50-day moving average, but now testing the 20-day moving average. So the world's most important stock market, the S&P 500, my friends, the 20-day moving average, one of my key indicators, now sits at 6,032. We're right in there testing at the moment. We tested it before. We did break it here back at the end of October. Obviously, the uncertainty of the election was still in there, but this is again a congestion at high, a sort of calmness, sideways action at all-time highs. That's still relatively positive. We haven't got that. We haven't seen the sort of the exuberance of the of a high getting bought out. We haven't had a peak. This maybe we not lots we're talking about it post-election, but we may see some cooling in January. But at the moment, the trend remains upside, and the big line in the sand remains at 5,935 or 5,930, where our 50-day moving average sits as well. As you can see, the last time we were below that was this beginning of September retrace, before we then rallied high for October, reached the end of October, then rallied high, retrace and rallied high. You can see the long legs to the upside still remain very much in place. So the Nasdaq obviously benefited from the AI rally that's been going best part of over 2 years now. What's my Nasdaq 100? There we are, 21,900 from the breach of 22,000 earlier this week. New all-time high there. We're down again today, but again, as you can see here on the daily, it's just into its 5-day moving average. So again, even further behind the 20-day, all the way down there at 21,400, and the 50 is all the way down there at 20,000. and where's that, 20,800 as well. So long, big support for the Nasdaq 100, the narrow measure of the tech companies, the big tech companies in the 100. The wider Nasdaq today is obviously also down. It's currently trading. Let me just check it on my other screen here. The Nasdaq is obviously they're all banged as well. So Nasdaq itself is down 113 points at 19,995. So it's come under 20,000 for the first time in a few days. The wider Nasdaq, so that's down as well. Nvidia got some buying today. It's up 4% after some massive moves for some of its competitors this week. Lots of people worrying about the Nvidia blow off, but it's had a phenomenal 18 months, and the future still looks bright. I remember the initial tech boom in the beginning of the 2000s, and this is even more exciting than what we had then, as the internet was very much just in its infancy still. But some strong companies came out of that, and I'm expecting a similar thing for this AI boom and a massive kick in productivity we are seeing before us, and obviously it has big impacts for all sorts of things in society. But anyway, Nasdaq up, energy's up. So let's have a look at how Billy Bitcoins have been affected, back to 103,000. So it's actually had a relatively good day, Bitcoin, today, hasn't it? We were down yesterday quite significant, and we've come back today. This is the hourly chart, and although it's down, it's nothing like the candles we've seen for the forex crosses, are we? So Bitcoin still bid 103,600. I never thought amazing talking about this. I mean, obviously following Bitcoin for many years now, but these numbers are just mad, aren't they? Crazy. But that is what happens in markets. These things can happen. So obviously need to move. Obviously you can see I'm not updated this since a few days ago. So we need to up that, don't we? Our all-time high now was yesterday, as we went to 108,000 yesterday afternoon. 108,000 was breached, and that's need to change that. So we just edit that whilst I'm here, if you don't mind. And this is this is, as I say, typical of a strong rally when we're getting new highs on a daily basis. So Bitcoin holding the bid very much to the upside, and interestingly hasn't been affected as much as gold. Certainly it's the yield market and the treasury yield market and other dollar dependent assets. So Bitcoin's very much in demand as well as some of the other key cryptos as well. Ethereum, I say Doge is up, when I say Doge is 130%, just actually, let me just show you that. I'm sure again you've all seen it, but this is the 5th. There's the 5th of October for Doge. We were down here at 14 cents, and we've been all the way to 45 cents. So 100%, 150% gain. At some point 300%, and we're back to 37, 38, about under 40 cents. But massive moves for these crazy assets. But anyway, Bitcoin remains bid and solidly bid, and as I've been saying for a while, the 20-day moving average now is moving to the $100,000 level. That's a key psychological level that when that breaches that, and the 50 is moving up to this previous support level. Again, really key, both psychological and technical levels here. As we've seen the rally, so the 50-day crossing this previous resistance area, potentially in the next few days, we still hold this rally. Obviously, Bitcoin can be incredibly volatile, but despite that, you can see the breakout has happened, and the big up candles, the big bodied candles, are the positive green ones. So we're up and are running there. So Bitcoin also bid to the upside. So interesting move. Let me go back to the euro. Has there been any respite so far? Aussie 62.70, not really. CAD 143.85. Go back to the 15-minute chart. That's now in place. So the first 15-minute candle is completed, and we're up. Let's just have a look at this. Well, Swissy, not many of you trade the Swissy, but yen also coming back a bit. Euro bounced a wee bit, but that's a huge down candle, isn't it? On the reaction of that, and similarly with cable, all the way through previous levels. So see how all this pans out. It's my phone going off. So let's just see that news coming through from the Fed. So we can expect quite a robust and confident Mr. Powell. Obviously, his position is being questioned by the incoming president, but he's been through this. Miss Yellen's been through this before. But yeah, the statement is very much on the positive side of things, which is what the market liked, which is why we saw the strength in the dollar. So economic activity has continued to expand at a solid pace. Labour market conditions have generally eased, and unemployment rate has moved but remains low. Inflation has made progress towards the committee's 2% objective, remains somewhat elevated. So, as I said, those three areas: the inflation, the consumer, and the confidence in the consumer, and the labour market, all remain, to the robust side of things. So, hence they were comfortable to go 25 basis points, but now saying it's a bit uncertain given the new policies of a new president for the pace of the cuts. So the dot plots have come back a tad, which is what the market was expecting. So it is a dollar positive cut from the Fed, and that's how the market has taken it. We are down here for cable at 127. 126.43. So we're under the key 126.50 area. If we look at the hourly time frame, and then we look at the higher time frames. So this 127 level has given way, and we're now back to these 126.50 levels. So again, we'll see how we pan out, and the 126 level, which we didn't get to here at the last week, earlier this week, on Friday, late last week, I should say. But obviously, cable traders, sterling traders, anticipating what Andrew Bailey and his team have got to say tomorrow. Before that, we've got the Bank of Japan overnight my time, but obviously in Asia that's trading day. So let me just bring the calendar back up. So let me just renew this. I'll lose all my savings, won't I? Dear. So let's do today. Yeah, it's putting everything. Oh, dear. Put these two big ones on. So apply. So there we are. So the dot plots, see how we've lifted interest rate 3.9% from 3.4, 3.4 from 2.9, and 3.1 from 2.9. 4.4 has remained flat, and longer term 3 from 2.9 as well. So again, you can see the dot plots sort of easing for 2025. For the Fed. So see what he has to say in about 5 minutes or so. Tomorrow, as we say, overnight, we have the pan. Market is expecting a no change. So huge, difference between sterling and the Japanese tomorrow. We'll have a look at pound yen in a moment. Expected no change either, so we're going to stay at the top end. So the Bank of England will remain the outlier, the highest of the interest rates, and the currencies at 4.75%. There was chatter that that may come under pressure. As you can see, there's a bit of disparities we saw in the Fed voting, but this has been long-term disparities here in the UK. And obviously it's Thursday, so we have the weekly claims tomorrow as well, and then the PCE on the core PCE prices tomorrow, but the PCE price index tomorrow on Friday is the key, really the final piece of the for 2024. But as I say, don't not trade next week. There's lots of opportunities around. My friends, I know it's Christmas week for many of us, but lots of opportunities in that final week of the year. And as I said, our let me just go back to the website. We have that's our evaluation, our products here. We've got we've got our festive 50 running until the 2nd of January, so you can get a 25% discount across our range of products. You know, as I like the 25,000. It's a it's the sort of account really. I can't tell you what to. I'm not allowed to. I'm not constrained by compliance. I have been, but that's the sort of amount really. If you're going to be trading a forex account, 25,000, $50,000. That's the sort of minimum to be looking at. And if you want to have a look at this challenge, you can see, our festive 50 coupon, takes quite a chunk of that. So for $130, you're getting $25,000 to play with. That gives you lots of margin to have multiple positions open at once, and keep that risk level to that 1 or 2% of each trade. And it gives you the idea of being able to really get into the markets with a bigger account. Obviously, the bigger the account, the more it costs. But as with all things, particularly in trading, the money comes to money. The bigger the more flexibility you have, the more margin you've got to play with. So you get more accounts or more positions open. Doesn't mean you be more risky, anything but. It's easy to trade with a bigger account. That's why people find it really, really difficult with depositing $50 or $100 in a direct broker, when that can be blown very, very quickly. Obviously, the retrading, and particularly us at the proptrade.com, is that we're here to help you. We want you to be successful, because if you're successful, we're successful. So don't, it's less than $150 to get this big, nice, chunky sort of $25,000 account. I mean, if you haven't got that, obviously don't, go back to the small accounts. We do cater for everybody. So even the $5,000 account, it's less than $50. What's $50? That's obviously it's a lot to some people, but it means you can trade with $1,000 account. You don't have to go and try and save or get people to invest in you as you would with other types of brokers. So and then once you've proved yourself, you get a funded account. Whether you're doing this 2-stage standard account or an express, 1 stage straight through. Check what the rules are. Stick to the rules. If you don't stick to the rules, you'll end up locking yourself out anyway. But don't get too disappointed when using. Don't get too carried away when you're on a bit of a winning streak. You will have a losing streak. Losing streaks gone longer than many expect. Winning streaks go on a lot more than many people expect. It's about keeping your emotions in check and just having your edge, and standing yourself and trading what makes sense to you. You don't have to trade everything all the time. Are you a 15-minute trader? Well, you've got to wait till the 15-minute candle's completed. Are you an end of day trader? Well, you're only going to trade once or twice or 3 times a week or something if you're just waiting for the end of day trade. So does that fit with your psyche? But the flip side, scalping on every 1 or 2 minute candles isn't for everybody's bag, but for some people it works very, very well for them. So that's what you've got to find. That's the trick. It's not the broker. It's not the person or you watch on YouTube. It's really you. That's the key thing about success in trading. Find what works for you, and we're here to help you find the right trader within you. Some people, it isn't right for them, so that they should walk away straight away. But you find out quite quickly in this business. But you'll be very, very surprised, because most people can learn about analysis and learn about economics and understanding what the Fed are saying today, some of the jargon they use. And I'm just as bad as everybody else when it comes to jargon. But finding your inner trader, that's something you do yourself. And as I said many, many times, get a mirror out, look yourself in the face, and it's you're dealing with. It's you've got to compete with, not the markets, not your broker, not whatever it is, people who think you're trading against you. It's yourself. It's all about emotional control. It's all about finding your edge and what works for you, because we're all different, but this market does the same thing day in, day out. And as you said, trends can go on a very long time. So tomorrow we got Bank of Japan, we've got the Bank of England, so plenty still going on. So do come and join us. Do get those challenges out of the market. I'm just spinning this out. I was just wondering what Mr. Powell might have to say when he first comes to the his microphone. He's not actually on his statement just yet. As he come out. Just as a picture here, watch Dowell dodge questions about Trump and tariffs while offering little about the path of rates going forward. No, well, he will be. But the market's anticipated, slower rate than perhaps we had. Certainly, we had 3 or 4 months ago. Actually, let me just bring in the see how the Fed's funds has changed in the last 15 minutes since the last 30 minutes, I should say, since the data has come out. So this is the Fed Fund Watch poll. So that's our today's meeting. Now you say it was 96. So let's have a look. See how that's flicked for January. So January, end of January as well. Remember, so Trump will be, by the time the Fed meet again. This is something I don't know what to tell you. Trump will be in the Oval Office. Trump will have been inaugurated nearly 10 days ago. So, and the first things we'll be talking about the economy. So now we have a virtual 90% chance of no change for January. There's still about 11% chance, another 25 basis points come January. March now there's a bit. Yeah, there we are. March is very much. It's obviously a long, not a long way, but it's far enough in advance. Third week of March, it's about 50-50 if you say 53-42 for still no change, 50%, over a 50% chance of no change from where we are now into the end of the first quarter of 2020. So it's that this is the one really to be looking at now, the March numbers as we go into 2025, but more on that in the new year. So thank you for your time, everyone. I hope you're well. I'm going to go off to the pub now, actually, because it's 7:30. I'm going to finish my milk and go and have a pint of beer. I hope you're well and you've had a good week. I'm not shooting off just yet. I'll be around the rest of this week and next week. Any comments? There's no comments or chat, no other assets anybody wants to have a look at. So let me just leave the see with gold and all. So a strong dollar remains the case. Aussie gold is still under the key 26.25 area. It's 26.22, and that short that on an end of day basis is further in the money. Thank you very much from this break here on the 13th. So we're continuing to trail down. I'll be moving my stop loss down tonight on when this closes, but as you can see, there's this channel here. Let me zoom this up. This channel here that we were going sideways for 9 days before we rallied up. It is breached, and it's been breached quite significantly. This lower point here was at 26.32. Whether we gain any of that back tonight, as the rest of the US. Remember, it's the 5 hours behind where I am now, so it's like 2 o'clock in the afternoon. It's 2:30 New York time. So lots of accounts will be getting wrapped up today and tomorrow into Friday, potentially for the end of the year. But certainly you can't rule out this 26.05, this late November low, and perhaps even a test of the 2600. If the strength of the dollar continues, there may be some buying, maybe some bounce back from that. So a breach of this channel is key on this end of day candle to continue that decline. But we may see, obviously, either see some buyback. But again, we need to breach back the top of the channel, which happens to be that 38 fib of the big shakeout we saw on the 25th, takes to 26.50. So 26.50 is the next upside target. And then above that still is the 20-day moving average. And now we can see here how the moving averages are now aligned. All the 50s flat because of this up and down. We now have 20, 9, and 5. Nice aligned. We'd like to see those curling lower, but I'll say we were short from the 13th and that short trade remains in place. Stop loss will probably be getting dragged down a bit tonight, perhaps at the 20-day moving out, perhaps not. Anyway, we'll analyse that tonight on the close of the end of day, because this is an end of day position. Short on gold. Indexes equally, yes, they haven't bounced, sorry, it's the daily, isn't it? Haven't come back a wee bit, still down. Sorry, it's the hourly, 15 minutes. So yeah, so interestingly for the indexes, certainly the Dow, which is weaker, we've had two. Now we're into the second hour, and we've bouncing a wee bit now. S&P, similar sort of pattern as well. So two, so 30-minute candle, big down candle on the indexes. Okay, I'll wrap that up. I'll see you tomorrow. I'm not quite sure, probably early in the morning, see how all this settles down overnight, how Asia takes the news, and see you tomorrow. All the best, everyone. Bye-bye. And don't forget, leave you with our challenges. Festive 25, give it a go. You know, what have you got to lose? It's $40. You've got a lot to learn as well, or potentially a lot to learn, and we're here to help, so just come and ask. And once you get a funded account, you know, profit share from 80% on these small accounts, from 90% or on these pro accounts from 90%, not to 90%. So profit share from starts at 90% on our pro accounts. It's not many prop trade companies offer you that as well. Anyway, take care. We'll see you all again tomorrow. I'm off to the pub. All the best, everyone. Bye-bye.